Welcome, everyone, and thanks for joining us today. This is the latest episode in Plaid's Tech Talks series, and I'm really excited to be here. Today, we'll discuss Pay by Bank and how to think about building a business case. We're seeing tremendous interest in Pay by Bank from a wide range of companies. And today, we want to help you understand the drivers, the state of consumer readiness for different use cases, how to think about the user experience and incentives, and hopefully we'll address your burning questions along the way. I'm Tamara Romanek, and I lead partnerships at Plaid. Prior to Plaid, I helped lead payment initiatives at Meta, Visa, Chase, and Netspend. I'm excited to be joined by two fabulous colleagues today, Lily Varone from Forrester and Trevor Neese from Adyen. Lily, I'm going to hand the mic over to you to introduce yourself.
Hey, thank you so much. Hi, everybody. So I'm Lily Varone. I'm a research analyst at Forrester. Forrester is a global market research company that covers business and technology in the age of what we call customer obsession. And I cover payments. I cover specifically merchant, how merchants can use payments technology, payment strategies to build better relationships with their customers.
Awesome. Well, thanks for joining us. And Trevor, over to you.
Yeah, hi Tamara. Hi Lily. Really excited for our session here today on payments. I run strategy for Adyen for all of our e-commerce merchants. So strategy, it's a big word. So what does that mean? Well, it's really about a couple things. One is what verticals should we focus our energy on, like online retail and digital content, but also what products should we invest in that really make a difference for our merchants? And one of the things that we are really investing in is open banking. So excited again for this session to talk about that.
Excellent. Well, thanks again to you both for joining us. Let's go ahead and dive in. There's been a lot of innovation in payments over the last few years. I'd like to start first with you, Lily, to talk a bit about the research you've done and how companies are investing in payments technology to deliver on their commerce use case.
Yeah, well, payments has been thrust under the spotlight and under the microscope for very good reasons for the last few years. It's a super mature market, but because of the way the market has evolved, payments in particular were the difference between staying in business or shutting the doors for a long period of time.
Yeah.
And so we're starting to see this awareness of payments software as strategic, not just tactical, and then this revolving door of new payment methods, new payment types, new frameworks, and things like this, really giving merchants an extra incentive to keep focusing on their technology here. And what we see is that 60% of global software decision makers are either implementing, expanding on their implementation, or planning to implement payment software this year. And that's up a little bit from 57% the year prior.
Wow. This is really interesting. At Plaid, we've actually seen a lot of interest in investments as well with open banking tech to complement the commerce ecosystem that you're seeing, whether that's to deliver on new user experiences, streamline user or seller onboarding experiences. And most recently, merchants have been leveraging Plaid and our partners to get started with offering bank payments. Now, as I understand it, you've also done some research around bank-based payments around the globe. Can you tell us a bit more about your findings?
Absolutely. So I think, as anyone who covers payments in the US, is likely to say, we're a little bit behind the world in bank-based payments and in other things. But in bank-based payments, our data supports this, right? There's been much more momentum in open banking and pay by bank and account-to-account payments in Europe primarily. Than there has been in other markets in the world. North America and rest of the world is sort of catching up to that as we discover either those rails are fortified or updated, or new frameworks and use cases come about for bank-based payments. I will say here that we don't have data on Latin America, but that consumers in Brazil probably have leapfrogged those in Europe in terms of bank-based payment adoption with the rapid rise of PIX.
Oh, that's great. You're so right. It's been so fun to watch the news around that one. Trevor, Adyen's had a lot of experience delivering various payment methods. You're very well known for this. I used to be a former customer of yours. So I'd love to get your perspective on how you're thinking about local payment method progress, as well as bank payments in the US.
Yeah, and I used to be a customer of Adyen's as well, Tamara. I just have to comment though, Lily, on one of the things that you mentioned because I think you're being too nice. I think the U.S. is way behind all other markets when it comes to other payment methods, right? Besides cards, and you can look around the world here, and in APAC, you think about the wallets, and I know this chart's just talking about banking payment methods, but if this showed wallets, right, it would just be through the roof. And the US has been making some good traction on wallets here recently, and really the pandemic has been a great help with that. Yeah, PayPal's been around for quite some time now, but now we're seeing a lot of other competitors in that space with Apple Pay and Google Pay and Cash App. And we also think about some of the installments. You mentioned LATAM, they've been known for installments for decades. Like we're so far behind, and we have this thing we call buy now, pay later. It's the same thing as their installments, right? But it's making some traction. And then if we think about banking payment methods, and actually this is the fun part, by the way, every part around the world seems to have their own kind of specialty to some degree. But in Europe, they're way ahead of us on banking payment methods. And some of these markets, especially Germany, has been just so focused on debit instruments over the years. And SEPA has been really a huge portion of that. But there's a lot of other payment methods that are very local to Germany or in that particular region that customers just prefer using versus cards. So, we at Adyen, one of our key strengths, no doubt, is the fact that we support, hundreds of local pay methods around the world. We make it very simple for our merchants to plug in and leverage that. But we are now seeing in the US, it's gotten much more complex because of all the new payment methods that I've described. For decades, it was literally just cards. That was it. As a merchant, you just do cards and you're good.
Yeah, you're so right. Just switching off of talking about so much of the things that are happening around the world, there are a few key areas of the world that have been really making dramatic change and growth. Trevor, I'd love to talk to you a little bit explicitly about what's happening in India and what's happening in Brazil. I know that you all have been deploying a lot of these, solutions in the market, and if you could just double click into that, that would be great.
Yeah, these two markets are just fascinating to watch, and I'm enjoying it. And Lily, I know you're enjoying it as well. But like just seeing, you mentioned Pix in Brazil. Like we haven't seen anything grow this fast ever. Like it's growing even faster per capita than India, as UPI system. But when we look at Pix, why is it doing so well? Well, certainly for one, it is solving a part of a customer need. There's no doubt it's removing a lot of cash from the ecosystem. It's also providing a much more, user-friendly and capable method for replacing debit as well. And we've seen that. Our data shows that debit cards have gone down almost near zero at this point. Like it's really, really capitalized on that particular market. And it's just begun. It's just begun. Like it doesn't even support recurring yet, which it will by the end of this calendar year. And once it does that, and if advancements become available, like you can imagine a world where even credit is not necessarily extinct, but certainly gets reduced quite a bit. So it's going to be a fun market to watch. Now, it's also accomplished a lot of this because the central bank has really been pushing this payment method significantly in the marketplace. Every banking app has to have Pix enabled, has to have the same logo, the same size, in the same spot. The experience is the same, which makes it great for the customer. They know how it works. They've used it once. They've seen it. It works the same everywhere they go for their particular bank or any bank that they go with. And so it's just really taken off. And then UPI is really been focusing on solving for how to remove cash from the ecosystem. But the government has been really, really behind this payment method and has really enforced the adoption of it by merchants, by the entire ecosystem. But it's also very, very cheap. I mean, it's nearly free, but depending on how you access it, you have to pay something, as a merchant to utilize it. So it's now not only enticing for consumers to want to use it because it just works. It's easy. It's leveraged by the stores and places they want to go to purchase from. But merchants love it because it's certainly way cheaper. So like Pix, it's also got tremendous adoption. But why these two are a little bit different than the US is the fact that it's the central bank. It's solving for a cash solution where they're trying to remove cash out of the ecosystem. And we see government support as well. And so some of that happens in the US too, but not at that level. And we'll see as time goes on. The US government, of course, has created FedNow. So we're starting to see some pushing in the space. But how much how much influence is the government or the central bank really going to have in the US is going to be interesting to see.
Yeah, it's been really fun to watch. And let's pivot back to the US for a moment. I feel like there's a certain level of inevitability when it comes to pay with bank in the US. In many ways, it's a simple, logical, digital evolution of how people pay with their bank account. In a digital financial ecosystem, we need a digital first solution, and all the pieces are starting to fall into place, which is pretty exciting. There are three primary drivers that we see around infrastructure readiness, the changing demographics of today's online shopper. My daughter is one of them. I'm seeing it live and in person on a regular basis on my account, and the kind of macroeconomic pressure to lowering costs. In terms of open banking infrastructure, Plaid has really tried to play a really important role to build one of the largest digital financial networks to make that account connection and authentication process secure and easy. We've also built tools like balance checks and identity match and Signal to help companies better assess payment risk in real time. And that's the faster the money moves, that's going to be even more and more important. And all this happens along the customer journey. It has to happen at the point of sign up, the point of account linking, and all the way down to that individual transaction on a recurring basis as people's behavior changes. Now, the launch of FedNow, as you mentioned, Trevor, it was almost exactly a year ago. This has been a catalyst for bank payments, and it's helping to drive this renewed interest in faster payment use cases. I'd love to switch gears now a little bit and talk, Trevor, about how the Adyen team is spending a lot of time focused on that merchant customer need, and would love for you to talk a bit about what you're seeing and hearing from your merchant customers. And then I'd love to have Lily do the same.
Yeah, my favorite part of my role, by the way, Tamara, is talking with merchants. And we did that. Certainly, you and I were both at the Merchant Risk Council, so this is very timely to have this graphic here in front of us as well. I've spent a lot of time talking to merchants about what's really important. How can Adyen help them solve for the scenarios they're looking to address, and whether it's reducing costs, whether it's improving approval rates, is it fraud that they have challenges with? And to be fair, it's all of the above. I think this chart does a really nice job showing the level of priority, but there are some nuances in this. Payment optimization is a big umbrella. I could certainly argue there's how to reduce churn in there. There's probably cost in there. Fraud is probably in there too as well. But I do think what was interesting to see on this, and what I heard as well, is that open banking is very intriguing to every merchant. And a lot of it's because they're trying to solve for that optimization. They're trying to reduce fraud. They're trying to save cost. They're trying to reduce churn. And open banking has a promise to address those things that are really most important to the merchants today.
Yeah, that's really exciting. And I know at the Merchant Risk Council, we did break out into sessions around pay with bank and payment optimization and risk and fraud. Lily, I know that you've heard a lot from the merchant community about that latter part. I'd love to get your thoughts on the risk and fraud concerns out there.
Well, yeah, I mean, usually when I love these data points, because usually when we survey merchants and payments leaders about their priorities, addressing fraud is sort of the knee-jerk reaction, the number one priority that has over the years been kind of comes on top always. And so then we have to go, yes, and what else might you be focusing on? And so what I think this data actually, I think, reflects more accurately what we see as these priorities, which is that yes, we must address fraud. Yes, tokenization and vaulting is really important. But it's all at the to the goal of optimizing, to the goal of doing this best, having our payment strategy kind of map to our goals and our needs. One of the things I think what's interesting here too is so I love to see that optimization is there, and I do think that sort of some of these other pieces, as Trevor said, right, sort of fit really nicely under that optimization umbrella. One of the things I think we should maybe mention here too is that the card networks, given the pay by bank kind of momentum that we're seeing in the US especially, but globally, we've seen the card networks kind of push tokenization as a key piece of their strategies. And so as we think about payment stories and payment priorities as additive, I see vaulting and tokenization as kind of an interesting kind of injection into the payment strategy in addition to open banking, because the card networks are really, really keen on continuing their dominance in the US in particular.
Yeah, I totally agree. And I think that one other part of the infrastructure we talked about account linking, we talked about the transaction risk. There's also that just very upfront KYC risk, right? And like the anti-money laundering screening and all of the things that we can be doing on the front end of that. Plaid's, really invested in that part of the front end too. And a lot of companies, my previous life, we bolted together a lot of our KYC solutions, and finding ways to do that part of the job, like as you're letting people in the door, has become even more and more important. And then the ongoing monitoring and risk and fraud monitoring is really important too. But we could be talking about that topic in its own webinar. So we'll probably move on from here, but let's talk a bit more about costs. I know that is a very big driver for the merchant community. Trevor, I'd love to hear more about the specific types of costs, whether it's operational, just straight up core hard costs as it relates to the existing way that they process today, and learn more about what you're hearing from them.
Yeah, and cost, we talked about that last slide. It was most likely incorporated that optimization component,
Yes.
but it's really fascinating. When I've talked with merchants prior to the pandemic, it was no doubt it was performance, 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 right? Which was really about approval rates at the end of the day.
Yep.
Out of the pandemic, the world has changed, and we've seen significant pressure on the bottom lines for all of the merchants that are out there, and which has really resulted in them focusing more on cost. And when I talk to a lot of our merchants, one of their most expensive line items on their cost equation is the payment cost and the end-to-end processing for that. And if you look at this chart here, this chart is a combination of e-com and a point of sale, right? So if you're an e-com merchant, you probably are spending more than 1.8 in the US. But the real point of this slide is that the North America, it's expensive. It's expensive. And so at Adyen, I mentioned we were investing significantly in banking payment methods in the US. Our goal is to invest in really the payment methods that matter, that really solve our customers' needs and make them available. We know cards are amazing. They work so well. They are expensive. And so if there's alternatives our customers are asking for, we want to certainly be at the forefront in offering those. In this case, there is a real opportunity to reduce cost, but it's not just cost. I think the other point that we should just spend another few more seconds on is churn reduction. So for those customers that have a card on file or a bank account on file or a subscription that they're basically paying for each month, it's really fascinating. Like the data shows that on average, an American holds on to their bank account for 17 years. And lo and behold, I've had mine for 17 years as well. And if you take a look at a card, on average, it's 2 or 3 years. And so intuitively, you can already see, okay, wow, well, if that card gets exchanged, yeah, there's a lot of great tools out there to make sure you have the latest card, but it doesn't always work perfectly, right? And so there's an opportunity now to reduce that churn, to increase that customer experience with also a bank account. So there's a lot that it can solve for here in this space.
Yeah, that's great. Well, I know we've done a good job here talking about the merchant community. I'd love to pivot a little bit and talk about the chicken and the egg in the ecosystem, the consumer. It's important to examine the consumer expectations process and how things are really changing. When you look at that Gen Z and millennial population, and I've marketed to millennials before, there's three different use cases or behaviors. Lily, keep me honest here. In that ecosystem of users, it really is fascinating to see how the majority of the US shopper population is really starting to make a move into the ecosystem. We have to pay very close attention to that. These are buyers who've grown up with the internet and mobile phones and gravitate towards these digital first experiences and want things instantaneously. They're also predisposed to using debit over credit, spending more within their means, maybe seeing their parents go through harder times. And they're the heaviest users of fintech. And we certainly see that at Plaid. Lily, would love to dig deeper into some of the research that or some of the things you're seeing on the consumer side.
This is one of my favorite topics, or maybe because I'm biased, because I'm a geriatric millennial. I'm the first sort of digitally native generation, and the world sort of stopped to cater to us at a certain point digitally. But I think that it really merits close analysis, to your point, right? There's certainly this emphasis towards debit and particular payments habits and behaviors, but I would argue sort of merchants have perhaps overcorrected to generalization of kind of payment adoption or payment behaviors by generation. I remember when merchants were calling us up and going, millennials are paying with Venmo. They love Venmo. We must accept Venmo on our websites. And we were going, well, those aren't the use cases that millennials are using Venmo for. And we're starting to see and hear the same thing about Gen Z and Cash App, and we have to accept Cash App on our websites. And we're going, wait a second, let's take a step back. So we did research recently on the younger consumers and comparing them to the general population. We've got data in the US and data in the UK coming soon. But the US data demonstrates, like, listen, younger consumers, they're online and shop online as frequently, at similar rates to the US average. They don't particularly have especially unique attitudes or attitudes around digital payments or reasons for using digital payments. They're generally quite similar. But there's two kind of distinctions that I think are really important to keep in mind, especially in the world of pay by bank, which is younger consumers vary from the general population in terms of the types of companies they trust to supply payment services or payment experiences. So they're much more likely, or they have more trust in big tech companies, in retailers, in fintechs to provide payment services. And the other piece is that younger consumers are more comfortable making payments in emerging touch points. So younger consumers are aware of, comfortable with, prefer experiences in emerging touch points. And so I would argue, when we're thinking about transacting via voice or virtual assistants, right? Younger consumers are much more likely to have done so and then to prefer doing so than the general population. So my argument there is we're probably not clicking deep enough in the analysis of the data and payment method, usage, because what's driving their digital payment adoption is actually these emerging commerce experiences in a lot of cases, rather than the digital payment itself. So it's just a long-winded and soapbox, way of saying, let's pay attention to the payment experience first and the use cases first, and then choose the payment method that drive those use cases or those experiences. Right.
Yeah.
That's the thing that jumps out to me when we talk about younger consumers.
No, that's great. And that's a fantastic segue to our next topic, which was really more about some of the research that we did at Plaid around consumer readiness and different pay by bank use cases. So thank you for that, Lily. For several years, Plaid has helped companies use bank payments for account funding, account-to-account transfers. Plaid's been around for over 11 years. And this includes moving money into and out of investment services and to fund digital wallets, for example. Now, high value purchases, which you can think of as kind of check replacement in this country. I think when we were talking about some of the other markets, we were talking about cash replacement, but in this country, we're thinking still about checks. And when I see somebody get in front of me in the checkout line with a checkbook, I'm like, oh my gosh, it makes my head explode. But maybe I'm biased payments professional. But I think ultimately, the kind of ways that we can actually displace or automate, expedite checks is a huge cost savings for merchants. And it's really been popular. We're working with companies like Tesla, Rivian, and John Deere, all who have like their own financial services offerings, to make purchasing vehicles easier through an embedded pay by bank experience. We've also seen a huge spike in interest from companies looking to implement bill pay, as well as recurring payment services. Trevor, you mentioned the recurring ecosystem and just set it and forget it kind of motions. And for subscriptions like gym memberships, video streaming series, services, and more. But we're also seeing a strong interest from merchants for implementing pay by bank for everyday commerce. In fact, I actually think that there's like a gas pedal down to the floor right now. We didn't think it was actually going to happen until next year, but there's a lot of interest around this topic right now, as we saw firsthand at MRC, et cetera. Now, there's an area we're really excited about working closely with our partners like Adyen, and that is to deliver the type of seamless checkout experience. We talked a lot about user experience that merchants are looking for and that consumers are expecting. Now, Lily, I'd love to talk to you a little bit more about that consumer interest for these instant payments. If we can talk a bit about the things that you're seeing with P2P and bill pay and other things, just to kind of complement what we're seeing.
Yeah. Well, Forrester's data really supports, I think, what you guys see, and we're trying to, it's I shouldn't say impossible. It's very difficult to survey consumers about bank-based payments, about payments in general, but around bank-based payments and instant payments and what is the difference and when is what. But we're starting to look at sort of, where consumers actually sort of haven't used bank-based payments. I love those automobile examples, sort of automotive industry, because I think our data demonstrates that those are sort of underrepresented in the use of bank-based payments when they could and very well should, be much more highly represented. But our data generally maps exactly to what you were saying. And when we look at the desire for instant, or their interest in instant-based payments, we're starting to see a lot of similarities to where those bank-based payment use cases are. They are slightly different in the US, especially being primed by some of the experiences today that aren't actually instant, but feel instant to the consumer, where there's a little bit of smoke and mirrors around paying family or friends in a P2P example. But that use case certainly dominates the interest in instant payment use cases. But paying bills and, where you really want to make sure that company, you meet that due date, is another instance. But certainly there's some services components too that have interest in instant use cases, like home services or paying individuals for particular services, right? What we like to say with instant payments is payments are instant. Payments should be instant. It's back to the days when I gave you a bill in exchange for that product or service. Technology has just gotten in the way. And so, it is, again, I think what this data demonstrates is, again, this point that the instantaneousness of this payment really is about serving the use case and where that speed is of the essence. And the same thing is true for those bank-based payments. It's where, where that method actually serves that use case and serves that experience. And what we've seen lately, and it was interesting, we did this data cut as well when we asked about bank-based payments. We asked consumers where they had done it with their account details, right? The account and routing number inputs, or whether they had used their online banking credentials to come in and pay for these things. And I was surprised that there wasn't as much of a delta. I think, to your point, you said Plaid has been around for quite a long time, right? The digital improvements in connecting those account services and processing the bank-based payments in the world that your partners like Adyen do, right? The technology has to be in service of supporting that experience, and that experience in the payment method has to be in service of that experience as well.
Totally. Yeah. And I think that's I love kind of like having the merchant piece, talking about the consumer. Now we should talk about how we're going to deliver this thing, right? So I'd love to switch gears to Trevor. We've talked a lot about the use cases that are involved now, and you and I've talked a lot about different types of merchant aspirations we have to help streamline processes, et cetera. It'd be great to hear from you about how this needs to show up in the checkout flow. So I'd love to turn it over to you to talk a bit more about that.
Yeah, I mean, there's been so much progress really in the fintech space, but when you think about bank payment methods and how they're used, whether it's online or even offline for that matter, it's been a pretty poor experience, up until recently. And this is a great example. You look at the graphic on the left. I mean, even today, I had to pay a bill. I think it was a week ago or so. I was like, oh, great, they got pay by link. I can just go here and like, oh, I can't use my card. Okay, great. What's the bank, experience look like? I'm excited to see what this is. And it's like, oh, I still have to enter my routing number and account number. And I'm like, okay, get out my banking app. Luckily now versus go find my checkbook somewhere. But I get my banking app.
Or the micro deposits,
Oh, I know.
Oh my God.
Fortunately, it's been a little while since I've seen that, but those are still around as well. I mean, innovative at the time, certainly, but the friction is just huge because it takes days, right, for that to validate. I think in my case, the routing number, account number, I go to my banking app, and of course it's hidden, so I got to find a way to unhide it and find it. And I'm like, oh, and then not to mention the site that I'm on, I'm like, I'm not sure I trust this site. I'd love if it was branded as something that I believe in and trust, right? And so it is my own experience. I'm sure we all have experiences like that. But we have to get to a point where it's like the graphic on the right. And it's actually cards now is even easier, right? I mean, over 50% of the time, probably I'm finding almost 80% of my time, I when I enter my card, I just form fill. It's just there. One button, it just auto clicks everything. In fact, I almost get frustrated if it's not there now, right? Because the industry's done such a really nice job, but it's set a really high bar. Like, how
Yeah.
do we get bank payment methods to be at that level? Because they have to be at that level, frankly, for customers to want to use them. And there's obviously ways to help incent customers to do it, but it's got to be close, in level of friction. It can't be terribly different like it has been in the past. And that's where it is really exciting to see, like, what we here at Adyen have done with Plaid to really help, reduce and remove, frankly, this friction. So there's a lot that we can solve here.
No, that's great. It's super exciting. So let's talk a bit about the kind of key factors that we see that impact consumers' willingness to use Pay with Bank. The one thing clearly is convenience. Convenience always. On the payment method side at Adyen, you all kind of expose a lot of choice to users, but convenience is really key. The audience, as we discussed earlier, both the younger generations are predisposed to debit and digital experiences, as we mentioned. Age can be a good indicator of readiness. And last is incentives. And what can you provide? Everyone's asking me, what can I provide to a user to incent them to actually use Pay with Bank? I don't know if many of you experienced getting a notification on your phone recently to ask you to change your payment method from a card to a bank payment experience. But there's a lot of large merchants that have influence around these things that are really starting to make moves to drive adoption. And the incentives can actually shape up a little differently. And I'll talk to you about that more in a bit. But on the next slide, I'd love to chat about how many people I speak with are trying to drive for this pay by bank usage or just getting adoption. And they immediately want to chat about those incentives. The incentives are definitely effective, but even optimizing that user experience, as we talked about, can be very effective in changing consumer behavior. This slide actually shows, like you had a before and after on your slide, Trevor, a consumer study that we did for bill pay when we were talking with the leading internet cable provider. The bill pay use case is one that's, very highly, ready for pay by bank adoption. We started with the company's standard checkout flow on the left that asked consumers to pay by card or pay with their bank account. And then clicking on Pay with Bank account provided two options: either enter your account and routing number or connect a new bank account via Plaid link. And on the right side is a bill pay user experience. It looks very different, where we optimized for using Pay with Bank. And this alone resulted in nearly double the use of bank payments with no incentives at all, right? Now, let's shift gears and talk about the incentives. This is, again, the number one question I get from many, many merchants. And of course, we have also explored this quite extensively. In the case, we tested a high-value e-commerce scenario, which was a $1,000 purchase, and presented various levels of cash incentives to the user and prompted them to select Pay by Bank over cards. That baseline use case of Pay by Bank was around 20%. And then the really exciting thing to note that just a 1% incentive yielded the largest gain of up to 67% on that $1,000 transaction. Now, we're excited to see that, and many of the merchants I've talked to are also really excited about it. So it's that fine balance of delivering the best experience, as well as maybe some incentives to get people to engage. Trevor, Lily, would love to get any of your thoughts or things you've heard around incentives around this payment method.
Yeah,
Yeah.
I was just going to say that it's this game that a lot of merchants play about a carrot or a stick. Do I surcharge the credit card transaction to kind of mitigate those costs, or do I incentivize and share some of those cost savings of the bank-based payment to incentivize? And I think it varies, depending on industry and whatnot and what history there has been. But usually I would say carrots tend to work a little bit better than sticks.
Yeah.
Indeed, indeed.
No, I think for sure. I mean, I think this data is fascinating, right? And it is the American way. Like, I am not a millennial, unfortunately. I'm a little bit older than that, but I can tell you, I do love my rewards. I've been trained to love them. I take advantage of them. I appreciate them. But I can be bought, if you give me incentive to do something else, I'm certainly happy to experience it as long as the experience and convenience to the point earlier on the slide, Tamara, is there. Yeah, count me in, right? So I can say personally, I can relate to this, but I do think that this data point is fascinating that you just need to offer something. Like customers, Americans, they got to feel like they're getting a good deal, they're getting something in return. And, there is a lot of diminishing returns on how much value that is as it gets increased. I do think, though, over time, in early days, I think incentives are going to be critical, absolutely critical. And you may not even need them if you go from a debit card, for example, to a pay by bank. Obviously, it'll help. But when we talk about moving credit as well, it's going to be super, super important. But over time, once we see a lot of customers using it, and you really get a significant scale, like maybe less of it's needed. It'll be interesting to see over time.
Yeah, and those
Yeah.
check and cash users too to convert, right? Hopefully it'll be an easier way for them to access their bank account versus writing a check or bringing cash in. So,
Yeah, I think the one last point I'll make there too is one of the things that solution providers in the space are getting better at is enabling testing.
yes.
Right. And rolling this out. And so I think that, like everything else, pay by bank will likely be additive. There may be a certain segment of consumers that really will stay until they sort of move out of our shopping pool, right? Like they will stay wanting to pay by check, depending on use case. There's other folks who are going to be married to their rewards. But you want to be able to test and learn and figure out exactly when to deploy this, because as this data demonstrates, there is readiness and willingness and the right use cases to pay by bank. And so I think the other thing here too is doing this research, using the data, especially some of the data we've shared today, but also recognizing that sort of testing and optimization, as we saw in a previous slide, are so important in figuring out exactly when to leverage this.
Yes. Well, that's a great segue to pay by bank. Are we at a point of arrival, Trevor? Would love to get some closing thoughts from you.
Yeah, and I love A/B testing, Lily. So I'm so happy you brought that up, because these use cases are just great examples of where A/B testing is going to be so incredibly powerful and helpful for merchants to really test. Like, is it the right payment method for what they're trying to accomplish and for what their customers want to use? And you guys already talked about data earlier as far as what we're seeing so far as customers willing to adopt. But bill pay, I think it's here, right? I mean,
Yeah.
I know it's interesting. I have a bunch of contractors that I've been hopefully getting out of my house soon, but are still here and doing great work. But ultimately, they only really take checks. And so I'm not going to write a check, but I'll have my bank write a check. So I'll still pay by through my bank to make that happen. But that's getting very, very common in this industry. Wallet funding, if you think about it, like PayPal really invented this again, what, 2 decades ago, like a long time ago, to use your bank account, because they realized it was a great way to help reduce costs for them, right? And that was how they're able to offer, perhaps even lower costs for some of their merchants. But wallet funding is becoming a great example, a great use case of where it can make a lot of sense. And especially, we talked about real time earlier, like how do you really start adopting those technologies, FedNow or RTP in the US, in combination with the Plaid authentication and what Adyen's performing and producing as well. It becomes a really, really nice option in this space. But I think what we're really excited about is the next two, the e-commerce and the subscriptions. And subscriptions, out of the two, I really love the subscription opportunity here, because it is pay method that will typically get charged once a month. And obviously, an ACH behind the scenes, which is a pull payment method, the customer doesn't have to be present. It's just beautifully suited for it. But with that combination of Adyen and Plaid, you can also significantly, if not kill, any sort of fraud that could happen by verifying the account, and even understanding like when the customer is able to pay that particular monthly charge, in essence. So that one I'm really bullish on. I think we see really, really huge upside there. And then e-commerce, like the chart that we showed earlier, those large dollar transaction size, I think is going to be a really nice fit for this. And then it'll slowly go down the chain. But this will be fun to watch. Like, these use cases continue to expand. And the best part here, Lily, maybe you have a magic ball, but like, what's the next one? There will be several of these blocks.
I was going to add, I think, we talked about high value. I'm curious about how this especially in the instant world, how micropayments will be supported by this. Micropayments have been so ebb and flow. We've tried to make it work in the card world, and
I tried to do it 25 years ago at my first startup.
exactly.
We were still on a dial-up modem then, not to age myself.
I think micropayments, I'm glad you pitched that one to me, because I think micropayments are the next one. That
Yes.
next frontier.
Yes. That'll be the next thing we try to solve for, right, Trevor?
Yeah.
The gaming ecosystems are kind of doing it with wallet funding, right? Like chipping away at, you funded the wallet, but chipping away at it that way. But yeah, it's pretty exciting. And I think there's so many more use cases that can pop up as a result of that. Well, in closing, I think this brings us to the end of our tech talk. I want to thank you, Lily and Trevor. I really appreciate all that we've been able to cover in this session today. I've learned so much from both of you and excited to work with you all to help the ecosystem deliver on these initiatives and to streamline costs and to meet that millennial and Gen Z generation where they are and the expectations around money movement, as well as to continue to push the economy forward. So I just want to thank you again. It's been great fun. I love to talk to other payments industry people we could be doing this for hours versus a small little window we have in this webinar. But thank you so much for your time today. I really appreciate it.
This was super fun. Thanks so much.
Yeah, thank you both.
All right. Take care. Have a good one, everybody.